Welcome to the Nicholas Brown Podcast, a podcast talk show about real estate investing, business leadership, and personal development. Each week, we explore current real-life case studies about how to build financial independence through investing in real estate to build your personal portfolio through passive income models, along with interviews from the top business leaders and personal development leaders. Now, here's your host, Nicholas Brown.
Welcome to the show, everyone. This is another, actually a special episode. The reason why I say it's special, this owner here is local. This owner is local, but he's, as I would say, I'm pretty sure he's going to be worldwide, international, but he's nationwide here in the United States, though. But I'm going to get straight to the source and get straight to the about section because I want to get straight to those questions, and I appreciate Mr. George coming in. So this is about Jorge Abreu. Jorge Abreu has been investing in real estate for over 15 years now. He started in single-family, small multifamily properties and eventually working his way up to 100-plus unit multifamily properties. Jorge has wholesaled over 200-plus single-family properties, fixed and flipped over 150-plus single-family developed and completed several new development projects over $20 million in ground-up construction. He has also started and built a construction company, bringing in over $12 million in yearly revenue and growing. He is now an active and passive full-time multifamily investor. George and his company Elevate currently have 2,525 doors. It's more, ladies and gentlemen, okay, with 284 under contract on the GP side. He is also over 2,400 plus doors on the LP side. George is the CEO of Elevate Commercial Investment Group and J&T Construction. J&T Construction focuses on helping multifamily investors with their due diligence and full renovations. He is also based out in the Dallas-Fort Worth area and currently owns properties in Texas, Oklahoma, South Dakota, but open to other areas as well. Strong points on locating deals, due diligence, executing CapEx, new developments, and raising equity. His goal is to raise 10,000 doors by the end of 2022, ladies and gentlemen, by creating strategic partnerships and implementing the proper systems in place of scalability. He focuses on continuing to grow his network and locate more co-GP partners, passive investors, and also clients for his construction company, and always looking forward to adding value and helping others reach their goals. Welcome to the show, George.
Thank you, man. Thank you for that intro.
Man,
I don't know what else to say after that.
Hey, man, I'm excited to have you, man. It's like I said, it's an honor, it's an opportunity. But ladies and gentlemen, I want to just get straight to the nuggets. Your listeners looking in, make sure you guys subscribe to my channel. If you're listening in, make sure you subscribe to my podcast. If you're watching, make sure you guys subscribe to my YouTube channel. But we're going to get straight to the basic questions. I said on the previous episode, I'm going to give a bonus question to George because my listeners, you guys either have a retirement income or you have 401k, or you may be new to real estate investing, which this is the right choice also. You can start in multifamily investing also, which I'm going to prove that. He's going to prove that, but here's the questions. So George, here's the first question. What got you motivated to get into multifamily, which I'm pretty sure you started in residential, correct?
I did. I started with single family. I was all about scaling and growing the business, which I was able to do with the single family, but to a certain extent.
Right.
At some point, it became pretty hard to push past that bar, and that's when I got introduced to multifamily syndication. And instantly having that scale when you buy 100-plus unit property, it just made sense. And I immediately started heading towards that path, and eventually just stopped doing single family altogether and 100% focused on multi.
Kind of like leverage, it's compound, right? the same work a timey deal on one on 10 roofs you can do on one. Am I correct?
Correct.
It's just about
Correct.
building a
And you're
team.
building that wealth versus, in single family, maybe if you have a really large single family portfolio, you can build that wealth, but it's also going to take a lot of work to manage that.
Okay.
You got to all spread out versus multifamily where you've got them, within the same building, like you said.
Sure, sure. Now I'm going to tie this in to people who have retirement income and 401k or new to real estate investing. Reason why I say I'm going to tie this in, people that have some funds or they want to invest, how did you start out? Did you start out with all cash or did you do the syndicate, which I know you was in residential. You could flip, make 15, 25, 40,000, 50,000 or whatever. But how did you start out?
Yeah, I mean, look, I didn't have a lot of money when I started
Okay.
doing investments in single family. I found somebody that did, and I
Okay.
leveraged them, and I did all the work. They provided the funds. We did that for a while. Started creating our own funds, and then just finding private lenders
Right.
to lend on the properties. And now, sure, we can go buy one property with our own funds,
Right.
but
Right.
then to buy the next property is going to be tough. So
Right.
that's where we use syndications to leverage that and be able to do at a scale, right? Be able to do
Right.
several properties and
Which,
bring
by
in
the
other
way,
investors with us.
how many properties you have now? Because that's not the current writing, ladies and gentlemen. It's been a month since, probably about 5 to 6 weeks when I reached out to George, and I appreciate the time. But since then, he has at least over 500 doors that he closed on. Am I correct? So it's not
Yeah,
2,200.
yeah, I'm right under 3,200 units now.
Congratulations, man. That's motivating, man. That's awesome, man. That's awesome. But that's about building the team, right? And don't quit, trust
Absolutely.
the people you with, it's a team effort in this type of business, ladies and gentlemen. Trust me. So let's go to the next question. Um, what is a tip? This is like a teaching. Like I said, we deal with motivation, teaching, and perspective. Could you teach us something? What would you have done, or what do you suggest for someone who has retirement income, 401k? What do you suggest for if they want to get straight from residential to multifamily? What would you suggest or teach?
So
What's the tip? What's the best
yeah,
route
yeah.
to go towards someone such as yourself?
So are we talking about passively investing in deals
Well,
or
well,
actively?
normally, like I said, based on my research, it's a lot of passive investors where I teach them. You got GP general partners such as yourself, and you got LP limited partners where people where they want to be passive, where they don't want to touch anything. They just want to get cash flow. Because people that's in retirement, they're up in age. They don't want to do the drywall, paint, carpet. They don't have their eyes on that. They just want to get some cash flow. But what would you advise the first step? Because they were looking to people for residential, you know, but compared
Right.
to this is a whole new beast or something like that. You know what I mean?
So I mean, if they're looking to build true wealth and not just keep their funds in a retirement plan, and that's only going to get you so much returns.
Exactly.
And uh, if you want to take it to the next level, alternative investments is the way to go. Um, my favorite of that is obviously multifamily real estate, because not only are you getting higher returns on average, if you pick the right deal sponsor and you
Right.
do your homework, you're getting better returns than you would with your retirement plan. But it's also the sector that performs usually the best within real estate when you have a downturn. So, and we just had COVID, and same thing was shown there. It performed really well compared to other sectors in real estate. Same thing in 2008, 2006, when the bubble popped. Um,
And would you agree
so
this? You can scale real estate compared to stock market and everything. Real estate is something you can scale, especially your investment. That's something that I can touch and see and feel. At least it's not going up, up and down every hour or something like that. That's what I tell
and
them.
the difference between multifamily and single family is in single family, you're pretty much betting on appreciation. And your comps are just whatever the houses are selling for in that area, right? Well, in multifamily, you can force that appreciation. If you're able to drive that business income, because multifamily is a business, if you're able to drive that income, you drive the value of the property as well.
Right, right. Which, ladies and gentlemen, if you look on LinkedIn or if you look at his blog post or Facebook, whatever, congratulations, you just closed on 100 unit plus. Which, for example, you're going to build a value. You're going to build a value up on that, right? So that's an example too. If you go in together, you still can track. You still can scale your income coming in as a LP or syndicate. So each process is just building. You can scale your income. That's my point I'm making on that. Am I correct?
Correct. Your income and your net worth as well.
Gotcha. So here's the next question, which I'm for time. What is you've been doing it? When did you first start at your first multifamily property? The reason why I'm saying I want to get your perspective, the pros, and I got to get the cons. When did you start? When did you get your hands on your first multifamily apartment? It's so far back.
No, it's not that far back. I'm just trying to think. It was over 3 years ago was the first one. I started focusing maybe about 4 years ago on multifamily, and then a little bit over 3 years ago. Con was that one was smaller. That one was under 100 units. It was 37 units. And
okay.
It took a lot of work because of that, because you can't afford to have the on-site staff
that
you can when you have 100 plus units.
Okay.
So I don't look at anything under 100 units anymore.
Really?
Yeah.
Okay. Because of the staff and the flow net operating, costs. Okay. Wow.
Well, it's a skill, right? So if your time is consumed by this one property, then how are you going to scale and give it a purchase more?
So, well, I'm going to be the advocate here. It just depends on what your goal. If you're looking to flip it or you're looking to hold it, if you're buying it through a commercial lender, you want to refi, So I'm just saying to build. So did you buy and sell it, or did you refinance it, or to get more? Did you buy to sell it to get more? I just think, because you say it was hard. You don't touch those anymore. I will, but you don't touch those anymore. What?
We sold it.
Really? Wow. How long did you hold it? How long did it take from completed and then get it up to par to occupied rate and all that good stuff?
Yeah, it's a little bit under 3 years.
Really? Okay. Yeah. Okay. Did it cash flow? I mean, did you?
Yeah, I mean, there was no. I mean, we did we executed on our business plan, and we raised the rents and we raised the value of the property. It just wasn't worth the time. I can put in less time into a 100 plus unit property, which is going to increase my net worth and my cash flow higher.
Sure.
Than focusing on this 37 unit property.
Okay. Here's another bonus question to my listeners before, which you answered it pretty much before. Advice for my listeners who have 401k or 401k being, what would be ideal to prepare for once they decide to join an owner or a syndicated partner such as yourself?
Yeah, I mean, I would say find the deal sponsor you want to invest with, right? Do your homework, vet them out, take your time, ask for references, really dig in. And then, I even have a list of specific questions to ask a deal sponsor. And once you have,
do you have a link for them to go to, your own link or whatever, or you can share it with me? I'll add it on to the.
Yeah, I mean, it's on our site.
Sure.
You go to elevatecig.com.
Okay.
We got a resources tab, and I've got a ton of free content there.
Okay, great. Okay.
So yeah, I would say, do that first, know who you want to invest with, and then just continue to follow up with them when they have their next deal. And that way you have that out of the way. And then you just got to analyze the deal and the market and make sure you feel comfortable with that. And then pull the trigger. Don't overthink it at that point.
Sure. And as one of the owners said before, there's three things you can take advantage of, ladies and gentlemen. You got your time, talent, and treasure. If you don't have the treasure, work on the first two, time and talent. Someone goes out and search those type of properties, which, ladies and gentlemen, you don't know, or you may know that he has a team behind him. Am I right? You can't do this by yourself. I promise you, ladies and gentlemen. You'll go crazy doing that. But he has a team that's putting this together. So if you don't have the treasure with the money, just work on the first two, time and talent, and work together on that. Networking is good also. So any last words, anything you got going on these next few weeks or few months? Or actually, I know what's going on. Ladies and gentlemen, look at at his blog site, his website on there. He has a schedule where he's going. He may be in your city or state soon. So at the time of this recording, which is July, what do you have going on, George? It's hard to grab this man, ladies and gentlemen. Next week you have 200 doors, which that's motivating. I'm serious. I'm just giving an example how you out there, man.
Yeah, we've got quite a bit going on. So we've got 2 deals we're going to be closing on here soon that we're raising equity for, and then a couple more following behind that, and then there's an event next week in Dallas I'll be at. Then the week after that I'll be in Miami, then Atlanta, then Augusta.
Okay.
And
I want to build a bridge. You said there's 2 deals that you're looking to raise funds on. Can you just give perspective? So, because this is going to go live in the next few days, either this evening or tomorrow.
I'm not sure if we're going to do a 506B or 506C on those yet.
Sure.
We haven't decided.
Sure.
So, if we decide on a 506B, I obviously don't want to.
Sure. That's why, ladies and gentlemen, that's why stay connected to his website, to his blog posts. If you're on LinkedIn, Instagram, YouTube, stay connected, because I'm going to have a link to that also. Okay.
Yeah. I would suggest in there, they can sign up to our investor portal and just that will send them any 506C deals we have. And then also my team will reach out and kind of get to know them.
Awesome. I appreciate that. Well, hey, George. Hey, I appreciate your time. Look forward to seeing you on the next meetup if I can at that time. I know I will. I'm going to be determined. To meet you.
You're in Dallas, man. We got to meet up for sure.
Exactly. Thanks for your time. Well, ladies and gentlemen, that's it on this episode. Remember, don't condemn, don't complain, because you have a choice to make a change. Thanks for watching.
Thanks for joining us on the Nicholas Brown Podcast. Make sure to visit our website, www.nickbrowninc.com, where you can subscribe to the show in iTunes, Stitcher, or via RSS, so you'll never miss a show. While you're at it, if you found value in this show, we'd appreciate a rating on iTunes. Or if you'd simply tell a friend about the show, that would help us out too. If you like this show and you are a new real estate investor, then check out one of Nicholas's free reports called the Wholesale Dominator Report, also located on our website, www.nickbrowninc.com/free reports. Be sure to tune in for our next episode. And remember, don't condemn, don't complain, because you have a choice to make a change. Have a great day.